Hello, Paul here. Today I'm going to be going over Forex, and I'm going to go over certain Forex pairs and kind of some strategies to do when trading Forex with these pairs. Today we're going to be looking at the US dollar against Japan yen. And instead of just going over it overall, I'm just going to pinpoint a certain Forex pairs. I haven't really talked a lot about Forex on this channel because I've gone over different I've gone to stock market, crypto, other assets. And I want to focus more on Forex and some strategies that you can do for certain pairs. And I'm going to go over kind of a formula that I've been doing for USD to Japan yen. And it's a two-step indicator, and it works pretty well. So what you need for this one is just your 9095 CM EMA trend bars with 9095, and then you need a CM Stochastic for this to work. So the focus here is looking at the USD Japan yen on a longer time frame. So this is not intraday. This is not every day. You'll find the patterns. Now, a lot of people will trade in the sessions. What I do is I look at it, and I just look at it as for the patterns and where it's going. Yeah, there's periods where it'll go slower. There's periods where it'll go faster. But I look at it as form of overall, what the overall direction and patterns doing. If you enter a trade, it could go slower and faster at certain points, but I don't look at it like that. I just look at it as a direction as to where the chart is actually going. Because on a long-term basis, if you hold them out for longer, you can actually make more. But it's all up to you what lot size you want to use for this, but I'll just use 0.01 as an example. Maybe we'll use a couple other scenarios as an example. But we'll look at the chart on now. Right now, the Forex market is closed, but we'll look at where it's been on the hour and see if we can find any good trading patterns. Okay, so to set this up, you basically need to go to your settings and go to indicators. You want to go to CM EMA trend bars. You want to click that twice, and you want to put in 90, 95. That'll put you with these little lines here on the bottom. The main purpose of the 9095 is to show you the overall direction of what it's doing. You know, what it's doing on the daily, what it's doing on the hour. It's color coded, so you'll know, if it's green, it means it's overall bullish. When the candles are up through the 9095, it's bullish. When it's below it, it'll turn red and it will be bearish. So what I like doing is I like focusing on the hour chart. I don't necessarily have to trade every day, just whenever you find the patterns. And then the next indicator you need is the CM Stochastic. So you want to go to your CM Stochastic. And what you want to do, I changed my settings up. Basically, the Stochastic, I have a bright green, the color, which is the bullish. Color 1, I have a bright red, and color 2, which is neutral, I have a white. You can change that to any color you want, but I choose a color that stands out, because you're going to be basing a lot of your trades off of color 2. And then I also have, the 100 line all the way up, and the 0 line all the way up. That's these top ones right here. So once you're done with that, that's basically how you set it up. So real quickly, we want to look at the USD with the Japan yen. So what we're going to basically do first, we need to identify where the candles are on a long term. And what we want to first ask ourselves is, are the candles above the 9095 or are they below the 9095 on the hour chart? So doing this here, we can tell that the Japan yen right now is bullish. So it's in a bullish trend. So if we look at our CM Stochastic, now one thing that will help with trades is if you look at the CM Stochastic and you look at the line, and you'll notice that the line never goes past the top part right here. It never goes past 100. So if you could go way back here and you can see that it never goes past that line, which means when this line gets close to the 100, it usually means there's going to be a pullback soon. So when it gets close to this top, it usually means there's going to be a little bit of a pullback. Whenever you see this line getting closer to down here, you'll know there's going to be, it's going to start going up. So one thing we want to look for with this is, since the trend is going up, we want to, the first, going with the trend, we want to make sure that this line gets as close to the bottom as possible to enter the trade. So any trade that's as close to this bottom as close to zero as possible would be a good entry point, but we don't want to base it off of that. We want to base our trades and all those the neutral zones, those are zones that you would want to enter. So you see right here that it comes close to the bottom right here and then it turns white. Right around here is where you would want to enter your trade to go in with the trend. So if we entered right here, where it kind of cooled off right about here, and then you enter right about here if you could ride this whole thing out. Now what you can also look at right now is you see the CM Stochastic's at 83 right now. So it's pretty close to the 100 line here. So it could go up a little bit more, but most likely it's going to start coming down. It's going to start going against the trend as the market opens. So from this, I can kind of tell that it might go against the trend as soon as the market opens. So let's just look at a couple examples where that happened. You see all these, they get close here and then right about here. So you really want to wait. So there's different ways to read this. If you want to go with the trend, you're going to have to wait for this green line to come down a bit, turn white, and turn white like right here. So you will have to wait for it to come back down a little bit. So you want to have it to come down, turn white right here, turn neutral, turn red a little bit, and have it turn back white again here, and you would enter again when it starts coming back up. You would enter like right around where it turns white or where it turns green. That'll be your next point of getting in the trade when it goes in with the trend. But right now, when it opens up, it looks like it will be going against the trend. So let's just go back a little bit and find some trades here. You see right here, this is the start of it being bullish. So it was red right here. It turned neutral right about here. And right about here would have been when you got in your trade. So if you came in right about here where it turns neutral with the CM Stochastic, if you rode this out from here to here, up here to the top, this is 10 hours, and this is a 1,425 pip move. So let's just go back here. So right in this section here, the trend is going down. So down would be the direction we really would focus on. So we see green. Well, this is where it starts. So we see green. We sort of turn neutral. Right about here is where we would enter a sell position. And we would ride it out till about here. And right about here to the bottom here, this took 15 hours. And this is a 1,532 pip move. Now use your lot size accordingly. So as we can see right up here, we see the green getting close to the 100 up here. So it's going against this trend at this point. So what it did is it turned green right up here, then it turned neutral. So you want to go against the trend. Would have been right about here. So this would also be a profit zone. And you could ride this one out too. This was a good move because this was a 2,414 pip move. So U.S. with the Japan yen, there's a lot of volume with it. It moves very fast. So if you know direction and you know where you're going with it, you could actually end up making a lot. So we've kind of looked at the strategy real quickly. We want to see how much you could actually make here. So we'll just look at a couple tick amounts, some trades that could actually lead into some profit. So this one right here was, we rode this out before the market closed. This is a 1,223 tick move. 1,223 tick move. If you did this at 0.01, you would have made $122. Now, 122.3. If you did this at a 0.10, that's 122. Let's see if I get this right here. 122.3 times 0.1. That's $122. 122.3 times 0.01. That's $12. So it's $12 at 0.01. It's 122 at 0.10. And anything beyond that is, obviously more. So you can kind of see where you can compound this over time. Really, you just have to understand the direction and understand the current direction of the Japan yen. It's very volatile, but if you do know the right direction, you could actually end up making a lot of money with this one. So the first time I traded the USD dollar with the Japan yen, I took note on how fast it actually moves and when you're actually in trade, and I would recommend doing this on a demo account because it does move very fast. It's just an asset to where you really just have to understand the volatility of it and how fast it moves. And once you understand that, you can actually make a lot, but you kind of have to understand the volatility of it and how fast it moves. But if you can understand that, you can actually end up making a lot of money with this because there's a lot of volatility with the US dollar to the Japan yen. So yeah, in the next couple days, I'm going to be looking at some other assets. I'm going to go over this formula for those. I'm going to look at a couple other Forex pairs and use this strategy to see how much you can make from it. But I believe the USD to the Japan yen is one of the ones that moves a lot, so you can actually make a lot from it if you know the direction correctly. So anyway, if you guys like this video, make sure to hit the like button, hit the subscribe button. I'll see you guys in future videos.